How to invest in the stock market. You may notice something different. I did shave today. As we all know, we're going through some very complicated times with this beer bug, but it has also created a lot of volatility and opportunity in the stock market. Recently, a lot of places are getting new surges and spikes in number of cases with this beer bug. But a few reports are coming up saying that we might have a bigger herd immunity than previously thought. Today, as I'm shooting this video, July 10, Warren Buffett just announced, the Oracle of Omaha just announced that he will be buying heavy on natural gas. And when Warren Buffett makes a move, we're talking about maybe 3 billion, 10 billion, he is sitting on a lot of cash. So the purpose of this video is to provide some light and thoughts on how to start investing, and for the second part of the video we'll cover how to choose a company. I'll be adding titles on the description so you can skip around. So before I get a lawsuit, I'm just sharing with you my experience, what I did, what I do. Do your own research, consult your financial advisor before doing any life changes, decisions, and also take in consideration that when investing, a person can lose money, and the market past performance is not a guarantee of future performance. So we have this array of companies that are all 0.5% off, some of them 75% off. So when we buy a company, we want to make sure we're buying something that will pick up and keep walking, not buy something that is dying and will finish dying and go bankrupt. How to invest in the stock market. There are different ways to do it. You have to take consideration if you want to be more passive or more active, how much time you actually have, and how much time would you be willing to allocate to this. So one way is to pay somebody to do your investing for you, but that comes with a cost, and sometimes that cost, depending on how much you're investing, could eat all your profits. If you're using a bot, a Robo-adviser, it would be a smaller fee, a fraction of what a human advisor would charge. And the other way is just to do it yourself. So we have different types of traders. We have day traders, which hold the stock for about a few seconds, minutes, or for a few hours. And essentially we also have swing traders. They will hold this, buy and hold the stock for a couple of days or a week. And we have long-term traders who are most of the investors, and that is what most millionaires and billionaires do. They hold for at least a year, 5 years, or for 30 years, entire life. Long-term trading is what I do and what I see most people with good results doing. To be able to invest in the stock market, you're going to need to open an investing account. I started trading with one of the bigger platforms, and they always charge trading fees. And they used to be like $29, and then it was dropping to $10, $7. But then Robinhood came with a fee-free platform, so you can trade for free. I would certainly suggest start trading with a platform that charge no broker fees, like Robinhood, Webull, and M1 Finance. I keep reading great reviews on them. None of these platforms pay me or sponsor me to say any of this. I also actually opened a Webull account. I have a link in the description below if you'd like. Once you open an account with Webull, you get 2 stocks, so you can invest yourself. I'm going to cover mutual funds, which just means small pieces of many different companies, such as an index fund, for example, the S&P 500, which is 500 large US companies. You don't get to choose, but every year as the company gets smaller or another company gets bigger, they get kicked out of the index of the S&P 500 and new bigger companies may join it. By being invested in an index fund like that one, you get instant diversification and you basically are riding the market. This strategy is the best route for many people. This strategy beats most paid brokers. What is the point to pay somebody to invest for me if that person cannot even beat the regular growth of the market? The market grows 11% a year in a 30 years average. Also 75% of the time the market is going up, and only 25% of the time the market is going down. We also have a 2 to 3% inflation a year, so adjusted to the inflation, The market growth is actually 9% a year. Individual stocks. I started investing with the index fund, but pretty quickly I transitioned to individual stocks, and that requires knowing the company. People sometimes tell me I'm gambling the money, but no, there's no gambling. It's more like a educated invested decision. Let's say if your Uncle Tom tells you, hey, can I borrow a couple $1,000 and I will invest it for us? In this case, you know the guy, you know the situation. You already know you cannot trust with the money, so you don't give the money. And if you ever would give money in a situation like that, it would not be an investing, but it would be a donation. But let's say if Uncle Tom is smart and knowledgeable, you know him, you trust in him, he tells you his story and you believe in what he wants to do, you give him the money, no doubt. Maybe he already does it and he has already prospered, or you believe in him, believe in his idea, and you agree. The same concept you do when buying shares on the companies that you choose. So I'm actually not saying that if you believe in green energy, now you're going to put all your money on Tesla. But for best results, you do need to understand and believe in what you are investing or invested on. How much should be invested? Set up a budget for investing. When you start investing, I say start with smaller portions. Invest 100 or 500 and see how you behave. Because the market can be brutal with volatility. If you see your account red today, what will you do? We may have all the plans in the world, but until that moment happens, the emotions start kicking in, and then we're going to start sweating. And then what do? You're going to sell everything and settle for a loss, or you're going to see an opportunity. If that company is great and it lost stock market value, but the company is intact and everything is still the same, maybe you can just buy more. Same thing if you go to the store and you want to buy a shirt, and today the shirt is this price and you buy it, and then tomorrow you pass by, the same shirt is half off. The same shirt, if it's the same shirt, it's half price off, I would sell the shirt already, but no, I buy a new one. That's why it's crucial to pick companies that you know and understand. We want the most profit and the least risk. Another thing we're looking for is the biggest profit and the least risk. The more time you have to have the money invested before you need that money or before you retire, more aggressive you can be. Not aggressive in terms of investing in a company that has chances of going bankrupt, but you don't want to be caught up needing to pull out the money in an economical downturn like the one we're going through right now. Don't invest money that you need next week or next month. Invest money that you can at least leave it invested for a year or 5 years from now. When should you start investing? It is hard to time the market, so it is best, for my opinion, to have time in the market. Another thing I want to say is that don't be too harsh on yourself. No one has never made a mistake in life. All investors at some point bought something that at some point a company fundamentals may change. But the biggest investors oftentimes still stick to the basics. So the conclusion, you have to decide the path you'll take. You can take the funds like index funds and then you'll be riding the market, or you may choose individual stocks. You developed a budget and not investing money that you actually need. While I don't know your situation, if you have a credit card, for example, that is charging 10, 20 or 30% guaranteed every month, it's probably best to pay that off than try to maybe get a 10% return in an investment. You open an investing account and now you choose companies that you know and understand. Another thing is to choose a company that something that nobody else has, maybe a secret sauce or a secret ingredient, or for some reason that company has a way of making it cheaper than everybody else. For example, Coca-Cola, no, that's secret. Nobody knew how they made it. And that was a big thing for a very long time, and maybe still today. Another, for example, Tesla, they make their own batteries, and they trying to make everything their own self so they can bring the production costs down. And Apple now is trying to make their own chips, and if they do that, making their own stuff, they're gonna put Intel out, and Apple can get it cheaper by making it themselves. I'm not saying buy those companies. I'm just giving examples of companies that have something, from the way I see, it's called a moat. It's a protection they have against other companies. And that moat, or that thing that they have that other people don't have, is what will allow them to pull through crisis, or sometimes even thrive while everybody else is struggling. Another thing to look at is the price of a company. Even the best company will not have an infinite price. A great number that I like to look at is the PE, the share price over the earnings per share. For example, you may look at the PE of a company, and if it's 10 or lower, maybe 8.5. So you see, now the company is very affordable, let's buy it, right? And if the company is maybe 10 to 20 or 30, this is like, depending on the company, you may buy it, or it's like 30, 40, 50. That is very inflated. You're paying a high price for that PE. But at the end of the day, you still need to take into consideration that you're buying something and you still need somebody else to buy it. So even though if the PE is low, yeah, alright, it's affordable and the chances of it growing is great, but there's still the need of somebody else, somebody else is buying it. Another great thing to understand a company are the balance sheets, also how much cash a company has in case it needs, how profitable the company is, and also who is the management and what that management person or team is about. Another thing I like to look at is what is the company current situation and what is in the news about that company. And another thing is, like, sometimes I like to listen what other people are talking and saying about the company. It doesn't mean I'm going to listen to them, but I'm just willing to hear what other people are saying about it. Alright guys, I'm going to start wrapping the video up here, and this topic will be hours long, but I'm trying just to make a quick summarized version for this. As I said previously, Webull does not sponsor me or pay me for anything, but a week or two ago I downloaded the application and I funded it with $100. And I actually will make a video and I will show you which stocks I bought and how I invested that $100. And my link is down below. If you decide to open an account, you can use it. You will get 2 free stocks. One of them could be up to $1,400. You do need to fund the account with $100. Later on, you can take all the money out. And let me know which stock you got, especially if it's $1,000 or $100. If you see any information with value on this video, please drop a like, subscribe, and hit the bell. I just wanted to mention also, I'm coming up with another video on how to pay $30 a month for your phone bill. Everything unlimited calling, texting, and data. I did it like a year or two ago and it was awesome. I remember I used to pay over $100, and if somebody can pay just $30, it's incredible. Thank you so much for watching this video. I have a few other videos coming up. I hope you like. Have a wonderful rest of your day.